What's up guys, it's the Cheapster here, back with another video, and today we got to talk about something that everybody loves, and that is inflation. Now inflation is my worst nightmare as a Cheapster because it means that things are just getting more expensive for the same amount that you were getting before for less. Not to mention it's also an entrepreneur's worst nightmare because it means everything you do you have to pay more for, and probably pass on that cost to your customers who aren't going to like that either, which leads to more inflation to yourself personally, which leads to passing on the cost to your customer. This really just keeps going around. And one of the biggest problems here is you can make more money, but if inflation is really bad right now, you're just gonna eat it all and you'll end up not even making more. For instance, the term hyperinflation's been kicked around lately, and we've been talking about maybe 5, maybe even to 6% inflation right now. So if you work some type of side job where you're making 5-6% more money than your normal income job, that kind of just disappears. So that's not something you really want to see, and especially right now as a delivery driver where gas and food is getting more expensive, which really affects delivery drivers. And in the past, one of the things you could do to protect yourself from this is to put your money into a savings account. Well, guess what now? Savings accounts are really bad. I've talked about this in a past video, but Ally is the savings account that I usually recommend because it's like one of the highest rates. That's only 0.5%. So if we're getting inflation around 5 to 6% somewhere in there, you're losing 4.5 to 5.5% on your money, even in that savings account. So it just seems like your money just keeps getting eaten. No matter what you do, it's just gonna get eaten away because inflation's gonna drive everything up and you're not gonna be able to buy what you used to before. And with government spending getting higher and higher and the printing of money just getting worse and worse, it seems kind of like this is just getting worse than ever. And that's definitely the sentiment I think I'm hearing around the country, with people saying that inflation is just running up on them, we're losing money, and we have to do something about it. Well, I'm here to tell you guys, even as a Cheapster, this is a tough time when things are getting more expensive, but don't worry because there are ways that you can protect your money from inflation, and it doesn't have to eat away all your money. There's things you can do to protect your money and probably even make more money during this time. So in this video, I'm going to go over some ways that you can protect your money during this time of high inflation, and I'm going to talk to you about some methods that you might not have ever thought about are ways that you can protect your money. But I do want to say, remember that I am not a financial advisor and this is not financial advice. You need to look into all this stuff yourself, and remember that investing always has some sort of risks to it, so you always have to be prepared that there will be some type of risk with investing your money to hedge yourself against inflation. And the options I'm going to give you guys vary in difficulty, so make sure to only get involved in these options that you fully understand yourself and that fit your risk tolerance and things that you would feel comfortable doing. So starting out with number 1, since savings accounts are terrible, probably the next primary way that people protect themselves from inflation is by using the stock market or funds. So obviously one of the quickest ways that you can protect yourself from inflation here is just by getting yourself invested into a mutual fund. But here you can also get invested with a fund that follows the market, like the S&P 500 or the Dow or NASDAQ. And I definitely think getting invested into an S&P 500 market is a good idea because it's definitely something that usually gives you a good return, and it's decently stable. I mean, if the market goes down, the market's going to go down, and it's something you should be able to expect that's going to go up with inflation, so you're not losing your money that way. But of course, another option here is just to get invested in individual stocks. Now, obviously, a good idea with that to not be risky is to get invested in what's called a blue chip stock. That would be something like Walmart, Apple, or Google. You know, those big companies that you could look around the room and be like, oh, look, there they are. But another thing you could do here is look for individual stocks that pay dividends, because you can use those dividends to hedge yourself against inflation too. And then 2 other options with stocks and funds that you could look into that I don't really recommend for most people because they're more difficult to understand and harder to get into would be ETFs and options. If you do have any experience with those can obviously be a good way to hedge yourself against inflation. But again, those are pretty confusing. I don't even fully understand those myself, so I would steer clear of those because I don't invest in what I don't understand. So moving on to option number 2 is real estate. Now, obviously one of the best things you can do here is just buy your own house that you're going to be living in, because then you'll get to live in that house and not have to move with the apartment prices and rent prices that are going to be going up too with inflation. And then you also get to gain all that equity in your house on top of being able to pay less because you got the house at a really cheap interest rate, which interest rates are insanely cheap right now. Like for instance, we just got a house and we got it under 3% as an interest rate, which is amazing. amazing. That's basically free money, especially when the inflation rate is this high and you get to take tax deductions at tax time. There are so many reasons to get a house right now to build wealth. And obviously with this, I would recommend getting into a good area, getting into a home that's in a good area that's going to continually go up. Don't buy into an area that might collapse. I mean, of course, you don't always know that, but definitely look for an area that you can see has long-term benefits to it where it should be going up in price. And another thing with getting your own house that I would recommend, but it might not be for everybody, is getting a fixer-upper. That's what me and my wife did personally, which is a pretty big task. We got a major fixer-upper. I wouldn't recommend that for most people. But even if you get a house that just needs some minor updates, that's usually a good way to build some more equity into the house. So you can build that equity on top of the housing prices that are already moving up in your market. So it really just compounds, and that's really when you can build wealth quickly. And my last options for a house, again, are things I don't necessarily recommend to you unless it's something you feel comfortable with, are getting rental houses or getting houses that are like Airbnb, vacation home kind of thing like that. Especially with vacation homes right now, the vacation industry is booming. They are pretty much sold out of everything. Anytime I check to find something, trust me, I've been trying to go to a cabin for months now and I cannot find anything. So that can be a really good option because right now when things are really busy, you're probably going to make some good money off everyone coming to stay there, and you're going to make some good money on the place that you bought moving up in price because of inflation. And not to mention, it's a vacation home that you can use for yourself then if you want, which is probably the only way you're going to get to go on vacation right now. So my next option, number 3, is probably one that I'm the most excited about because it's been something I've been learning so much about lately and just realizing the potential of it, and that is the crypto or stablecoin market. And I know cryptocurrency could be something that kind of turns you off because you might not fully understand it. There's a lot of scams in it and stuff, but I'm actually going to tell you some ways that are very pretty safe. I mean, of course, everything has some risk to it and things could go to zero. I mean, that's always a possibility, but that's a possibility with the stock market too. But there's definitely some ways that are actually very low risk that you could make some good money in this market. So first off, one of those things is obviously Bitcoin. I'm sure you've heard of Bitcoin. It has been around since the beginning. That is what began everything. It is the big boy on campus, and it has been growing in value, and actually today just hit its all-time high, which means, you know, it's the time to buy, right? Buy high, sell low, wait. But for real, Bitcoin has really been growing a ton in acceptance. Not to mention that Bitcoin as an investment has outpaced most other investments out there throughout the years. Now, of course, you don't know that that's always going to maintain that way, but it's worth looking into. Also, another big one that you probably have heard of is Ethereum. That one has a lot more to do with utility in the blockchain market. Bitcoin is a little bit more like a store of value, kind of like a digital gold, and Ethereum really has more utility for things that can work on the blockchain. This gets really confusing, but basically, Ethereum is pretty cool. Now, of course, this is just my opinion, but I think Ethereum has a lot of growing to do because it really does solve a lot of issues in the blockchain decentralized markets. So without getting into the weeds with all that kind of stuff, because that's just another video I need to make, Ethereum is definitely something that could be a pretty good hedge against inflation and probably make you some pretty good gains. There's also a bunch of other cryptocurrencies out there that you can look into, but these are the biggest 2 that are probably the least risky. And I say least risky because the cryptocurrency market is a very up and down game, so it definitely is something you need to be careful with. Now, I do think a lot of that stuff will stabilize out within the next decade or so, but again, that's the next decade or so. But that brings me to what I think is one of the best ways to hedge against inflation. That is the stable coin market. Now, if you don't know what a stable coin is, it's basically a cryptocurrency that's pegged to a normal currency like a dollar or something. So for instance, US dollar coin is something that's pegged 1-to-1 to the US dollar. And there's a whole bunch of back-end stuff here where these companies actually hold the amount of money that you're supposed to have in the coins. It gets a little complicated here, but basically it's all supposed to be backed 1-to-1 with US dollars. So it's kind of like how US dollars used to be backed by the gold standard, but instead now it's this digital coin is backed by the dollar standard, which is backed by nothing. I mean, that's just because the dollar's insecure, so I don't know what to tell you there. But something really cool that you can do here is there's apps like Celsius Nexo, or BlockFi that I would recommend that will actually give you an interest rate on those stable coins. So for instance, Celsius is an app I really like that will give you 8.88% interest, and there's some codes you can use, some bonus codes to get free money with that. And if you use my referral code, you can get free money with that. Actually, every single one of these has a referral code that I'll include down below in the description. But that stuff is really cool to help you hedge yourself against inflation and just kind of grow some money, because that's even higher than the inflation rate, even on the worst inflation predictions. And since it's 1-to-1 backed by the US dollar, you should be able to take it out without any problems. Again, here I say should. There are things that can happen. I'm very new to this kind of stuff, but as far as I have read and understood, it looks like this is fairly risk-free. Again, I say fairly because everything has risk to it, and who knows, US dollar coin or something could just tank and disappear. It could be a fraud. I don't know. There's stuff that could happen, but it's been around for a long time and it seems pretty safe. But again, that's something you need to look into yourself to see if that's something that you would want to do. And the last thing I would recommend that you can do in the crypto market too is you can use those places I recommended like Celsius, Nexo, and BlockFi to actually get interest on your Bitcoin and Ethereum or other coins. So for instance, Celsius, like I was talking about, has 6.2% interest right now on Bitcoin. So if you're already buying Bitcoin in the first place because you're expecting the value to go up and you're making that investment, you can also invest that and make 6.2% more Bitcoin on the investment you already made. So this is where you can see it can get really cool to be able to invest because you're almost double investing. So this is a massive hedge against inflation. This is definitely something that I'm doing because I think that this is a really great way to build wealth and hedge yourself against inflation. But I'll definitely be doing more videos on cryptocurrency because I think there's a lot of use that you can find with the cryptocurrency market to build your wealth. There's just so much stuff you can do with it. Not to mention there's just a lot of promise there that I think is something we're really gonna see in the next decade. So that brings me to my last option for how you can protect yourself against inflation, and that is number 4, just building other assets. If none of those other options I gave you before sound good, then maybe some of these will work for you. So that could be doing something like getting into collector items. Maybe you're really interested in collector cars or sports memorabilia or Pokemon cards. You know I got that base set Charizard. Definitely played with it though. Definitely put a lot of scratches and bends on it. He was just too strong of a card. You had to play with him. Now, of course, this is an area where I definitely say make sure that you understand what you're doing. But if you really have a lot of knowledge with collector items or some kind of area, this could be something that you could really get into to help build your money with your assets and protect yourself from inflation. Now, another collector item thing, I guess, that you could get into is NFTs. I'm not even gonna pretend like I understand what NFTs are. I've looked into them and I still don't understand, but if that's something you understand, that's definitely a way that you could help hedge yourself against inflation right now. I think a lot of people are doing that to the point that I don't even understand why people are paying prices for certain things. I don't know. I'm not ready to go all in on the NFT thing because it does seem a little bit sketchy. But hey, like I said, I don't fully understand it, but that is something you could look into. Another more common thing you could look into is getting into just gold and other precious metals. Now, this is something that's probably not going to work as well as it used to in the past. People aren't really putting their money into gold like they used to hedge themselves against inflation, but that doesn't mean it won't work. So it's still something you could look into, especially because buying gold or other precious metals are some things that you can actually buy and physically have. Now, of course, that has some downsides too, like you could lose it or somebody could steal it, but you can feel a little bit more secure that you actually have, you know, that gold in front of you. It's something you can see and know you have it. Unlike the US dollar that we're just supposed to trust that's worth something. That's some expensive green paper. And another thing you can do with gold and precious metals to not actually own it physically is you could get into ETFs. But again, if you don't know much about ETFs, I wouldn't recommend getting into that until you at least educate yourself on it. And the last thing I would recommend here in this category is getting into other commodities. So that could literally be anything. Whatever you want to buy that you think is gonna raise in value and you'll be able to sell it later. Now, of course, more commonly, this is stuff like oil, cotton, or like coffee beans. And normally if you're going to get into that kind of stuff, you would want to buy commodity stocks or ETFs or futures. You probably wouldn't want to hold it physically. I'm just imagining you have friends over and they see your spare room and it's just completely packed to the brim with buckets of oil. I mean, don't get me wrong, I run an eBay business. This room next to me is pretty much packed to the brim with stuff. But hey, there we go, commodities. The thing here is that pretty much any asset that gains value is gonna help hedge yourself against inflation right now. Of course, you want to make sure that you don't get into things that don't gain value, like, you know, electronics that are gonna get outdated or cars that are depreciating. So really, those are the options that I could come up with. If you guys have other options that you've thought of that you could hedge your risk against inflation right now, let me know down in the comments. And something I do want to say during this time that can really help you with inflation is to make sure that you're keeping your income up. And in some jobs, for instance, like for me as a delivery driver with Grubhub, DoorDash, and Uber Eats, I can't control how much I make, and if inflation raises prices, those companies might not raise your pay. So those kind of situations are just rough, and there's not much you can do there. But if you work at a job where you actually do have access to somebody that you can ask for a raise, that can be a good thing if you're not already getting raises. Now, of course, you should expect that there could be some pushback because there's not a complete consensus right now on the fact that we're actually having inflation and to what point we're having inflation. It is a little bit confusing to measure that, but I definitely think we're feeling inflation. But another thing you can do right now is change jobs. I mean, for instance, changing jobs like every 2 to 3 years is already one of the best things you can do because it makes you more competitive in the market for when you go in to get a new job. You may have already experienced this at a job you're at when somebody comes in and they're getting paid way more than what you're getting paid when you've been there for years. Unfortunately, that's just kind of the way the economy works sometimes because they have to find someone, and if that's the paying rate at that point, that's what they're going to pay. So it's not a bad idea to look around for other options, especially right now when there are a lot of jobs open. Another thing you can obviously do is just find a side job or a side hustle, whatever it is that you can start, maybe a side business, just something that can bring in some extra money. That's always a good idea, but obviously if you can find a side job or run a side business, that's going to help move up with inflation too. That's obviously going to help you hedge yourself against inflation, making more money at the rate of inflation too. So that's what I got for you guys today. Inflation is not a very fun thing when you experience it day to day, when you have to go out to the grocery store. Like for instance, you're going to Aldi, you know, and you normally buy the 79-cent carrots and suddenly they're $1.19 and you're like, huh, I mean, that's just a few cents, right? But then you go over to the beans and they're more, and then you go over to the apples and they're more, and then you go over to the meat and it's like twice the price. It's not a very fun time for a cheapster. But I definitely want to say, remember that the value of money is a little bit irrelevant because it doesn't really matter what your dollar can buy if you're bringing in more of those dollars. If what you used to buy yesterday cost you $1 and now it costs you $2, it doesn't really matter if you're making $2 now instead of $1. It all should kind of just balance out in the end, but of course that depends on if you're making sure that you're keeping your income up. There is a little bit of a catch here where you're probably going to pay more in taxes because you're making more, even though that money's not going as far. So it's kind of like, you know, the government gets more of your money and you don't, and they're the ones making the laws, but I'm sure that's not related at all. But thank you guys so much for watching. Hopefully you guys can make it through this crazy time of inflation, hyperinflation, whatever you want to call it. And remember to do the cheapest thing you can today. Tap that like button and also subscribe to the channel for more content like this. And I will see you guys in the next video. And remember, stay cheap, even if inflation is making that kind of hard.
Hey, you better be saving that money. Don't you be spending it now. You're still here watching this? You might as well just subscribe. Why would you not at this point?